Hello, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Thursday, the 25th of July, 2019. Thanks for joining me again this morning. Well, at least morning my time, maybe not yours. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1563 today. The overall market sentiment, we're seeing somewhat of a mixed bag. We've got some strong numbers, earnings out of Europe, some weak economic releases out of Europe. The Nasdaq's the laggard today. It's down 23, 24 points or 0.3%. The bonds are down 8 ticks. The DAX down 27 points, and the 10-year is down 3 big ticks. And the Bund is down 5. Those of you who aren't aware, the ECB rate decision came out at 7:45 Eastern, and currently ECB's Draghi is in a press conference which started about a half hour ago. Seems a little bit dovish in terms of outlook. Seems a little bit bearish on progress. Several comments of things getting worse and so on. So expecting further stimulus from them potentially. Kind of odd because they're already at negative rates, which is probably where we're all headed. Anyway, so that's where we are. The big items today really is that the Nasdaq being off. Partially because Facebook warns of costly privacy changes, discloses another U.S. probe. Uh, Facebook's been probed more times than a drug mule coming into Miami Airport, I guess. But Facebook said that new rules and product changes aimed at protecting users' privacy and slow its revenue growth into next year and significantly raises expenses, taking the shine off of quarterly revenue results that beat expectations. The overall market is strong this morning. We did push yesterday's high, which was a new all-time high at 3022 in the S&Ps. European stock markets rose, supported by strong earnings from Roche, AB InBev, and LVMH. The euro is down in anticipation of the central bank decision. Asian equities ended up green, and oil climbed up. Oil's a special case that I'm going to just spend half a minute talking about. Oil came out with inventories, the EIA inventories yesterday, and showed a draw of 10.8 million barrels. And so it pops higher by about 50 cents to 57.64, something like that. I don't have the chart in front of me. I think it was 57.64, and ends up um, dropping quite a bit. Oil ended up closing from settlement or from close to close, ended up closing $1.27 down. It has recovered somewhat today. It's trading at 56.74, but it's still a buck lower, an entire dollar lower than from when the inventories came out. And again, the inventories came out really weak yesterday. Very, very interesting. And the inventories being weak, is being attributed to the hurricanes and the fact that a lot of facilities had to be closed last week. So we expect a little bit of a draw there, but a draw generally means that prices would end up higher. So those of you who are trading crude might want to pay attention here that there seems to be a fair amount of capitulation. The market's not responding as expected. Anyway, so that's how things are setting up. Don't forget that after the market today, Alphabet, which is Google, Amazon, Intel, and Starbucks are reporting. So pay attention after the close. We may see some movement there. Let's take a look at what was expected yesterday. Actually, briefly, I want to look at what could interrupt our auction. There was a lot that was released overnight, quite a handful of strong, big numbers that came out. The IFO business climate came in weaker. Out of Germany, the ECB announcement in line, the press conference is ongoing. Durable goods, which is a leading indicator, it's basically looking at orders coming in for the month of June, month on month, for durable goods, things like computers and airplanes and fridges and things like that. Um, it came in actually quite strong, 2% versus 0.7%, the prior's negative 2.3%. Quite a strong number there. Wholesale inventory is weak, and the deficit, the goods trade balance, came in worse, negative 74 billion versus negative 72 or so. So here's where so there's nothing to look at for today in terms of schedule interruptions. Here's what we expected yesterday. We were trading right in the low volume node, right in here the prior day. Remember, um, Tuesday came, finished up with a double distribution with a very, very clear LVN there. So, oh, this isn't an actual chart. It's the video from yesterday. Um, so we opened right in between, which put us in a kind of a weird situation in that we are right in the price zone where the market was not accepting those prices as evidenced by the fact that there is no volume there, and also the fact that it's at the 3,000 or the millennial level. Uh, and so it could have gone either way. Markets can always go either way, but generally there's a when looking at the narrative, the scale in terms of what's expected tends to tip one way or another, and the scale tips towards scenario one. And that's why it's scenario one. It's the big trade of the day or the big trade idea of the day. And what I was looking for there is a potential for a test lower, but overall, I was looking for scenario one to push higher. The key figure above is 3014. 3014. It ended up pushing to 22, which is two stock zones above. We had 3014, we had 3018 and a half, and 3022. And 3022 happened to be the high that was put in yesterday. So you could say the scenario one played out, but honestly, it did not have any pullback. There was, frankly, for me, for my style of trading, and hopefully some of you caught that move on the open, there was just nothing for me to do with that burst higher on the open. I mean, there was no pullback. I don't trade breakouts. Um, we all have to kind of set the limitations around what our trading plan is because we can't be good at everything. You can't be uh, a good goalie, but also play a striker during a game, play midfield, and play defense. You might be able to have the skill set to do all of those, but as a professional player, you have to get really exceptionally good at one of those. And so that's the breakout trade is not mine. I know it's a lot of people's you know wheelhouse, and it's not mine. So I was looking for a pullback to go long, and it just did not happen until we got the mid. So scenario one in play with no pullback. Here's what actually happened. There it is. It's a small, very tiny open auction. And remember, scenario one was looking for an open auction that drifts into the point of control. That's the line for the point of control right there. And then to start to break through the low volume node. Once it breaks through the low volume node, this would give me a high confidence long. In other words, go in heavy for at least a test of the 3006 area, 3004, 3006 area. So expected some resistance at 3004, and then from there take out remember yesterday I said we're very, very likely to take out this 3009, 3010 area and start moving towards 14 as a conservative estimate. Okay. And what it did is it had this very, very small open auction. On the open, we opened in range and somewhat in value in a double distribution, and it just took off, blew right through that high, and then consolidated for a bit. Not much to do this with this, a very tight consolidation, and it finally provided this opportunity to lean against 3004 and the mid. The mid being, for those of you who don't know, the mid of the session is this blue line. So we have an impulse. We're trading off of the impulse. The impulse had a continuation. So this can be seen as a potential corrective move. In other words, it moves down, consolidates, and then has a continuation. And it did. It had an impulse down. So you could see that the rotation was pretty high. Impulse down, tight pullback, and then continuation. It took out that low as we would expect. But on the bigger time frame, remember the market works in fractals, or just depends on how much you zoom in and out. On a bigger time frame, the mid was still in play, is untested on the session, and that provides a long, and then it starts to drift out and push, and we end up with a pretty good high volume node at the top. We did not migrate the point of control up. Not quite a trend day, although the profile says that there is no real value found yesterday. And then we finish up with a very, very weak high. And so those of you who've been around a while probably rolling your eyes, and you know what I'm going to say next, and that is it finishes at the high with a high volume node at the top. What does it do? It is likely to continue higher in the overnight session, and it did. It pushed to 30.2775, about 5 points higher, and that's how we finished the day. Yes, yesterday marked a bigger picture impulse up day. Here's what it looks like overall. So we've pushed to this 30.2150, pulled back down into 29.75. And capitulated down here quite a bit, had the neutral extreme up, right? Neutral extreme. This was a neutral extreme up day, and as I told you yesterday, this is a neutral extreme up is a pretty strong, traditionally a pretty strong sign that that buyers are likely to be in control and likely to keep driving higher. We had neutral extreme up here. So you can see we broke the IB high, pulled back, and then reversed, broke the IB low, giving us neutral, and then we finished near highs with the point of control, with the high volume node near highs. So this day here and this day here are very similar. This day here are very similar, both neutral extreme up. This one being at the low, which is very, very significant. Um, and so the expectation is for a continuation higher, and that's why scenario one, scenario one was for continuation up, right? So that's where that comes from. That's the recap of yesterday's action versus our plan. And then what we've done overnight is to sit sideways in the Asian session. Europe comes in, has a little pop, has a little drop, and it's just played around quite a bit. We've spent quite a bit of time in the mid VWAP point of control area. Notice mid VWAP point of control right on top of each other, the point of control being the purple mark, VWAP being the cyan, and blue is the mid. And all of that is taking place right on top of the prior all-time high at 2150 and the new all-time high put in yesterday at 22. All of it is happening all in the same spot. So we had a run up this morning, which we are taking back, and we have actually taken out the low of the low point of the rally point before the ECB announcement and all these other figures came out. Okay, so this market is showing that it's somewhat done on the upside in the overnight session and is moving back firmly inside of yesterday's range. I'm looking at 3013 as a key resistance area. This is a single print. This is yesterday's market profile right here. So let's merge these right so that we can see a composite of what's going on in the market profile. Boom, merge it right. So I'm just accumulating all of this into this July 1st micro composite. So I made a post about this earlier in the week, and to show that the one day, the other day, it kind of moved from here to here in one session, and then it moved back up. And then when I zoom into yesterday, what we'll see is an excess low. Market opened right there, tested down, and left this long string of singles in the B period, which is the first bracket of the day. Where's the area tested from there? It's 3004. 3004. Again, as I said, was pretty important for yesterday. Had no respect for 3004 on the way up. I did expect it to kind of pause there, pull back, and push through. Had no respect, but 3004 was the golden number for the long against the mid, which to me was the clearest structural setup presented. But once we started to rotate in here and started to break out, notice the single prints occur in K period at 3013. We have a minor single at 3015.50 and another single at 3017.50. So this is all this is this is where the 3013 comes in. 3013 also a low volume node on the microcomposite. So overall, I'm looking at that area as a key area to monitor today. It comes from right in here. See that double top with a low volume node there. It also shows up on the volume profile. And so that's the first test area that I'm looking at. Now, what do we gain from the overnight view? Inventory overnight looks balanced in price and in delta. I need to change the way these are colored actually because it's very confusing. In price and in delta, let's change this because I can't tell what's the. All right. In price and in delta, quite balanced. So I'm expecting this is bringing us into an area where I'm expecting this to be somewhat choppy today on the open. So what are we looking at for today's expectations? I think I'm way over my time here. For today's expectations, I'm looking for so an open auction in range. I'm expecting an open auction in range. I'm looking for the market to continue the push down that it just had. Looking for this 3014.75 to be challenged into 3013. Expecting it to chop around in here, make an attempt lower, and then turn back up and hold this area for a push of the high. We have a weak high from yesterday, and I'm looking for 3027 on the outside. So overall, just 14 points of range, 14, 15 points of range, but trading from the top side. Here's the caveat with this approach. The caveat with this approach is that every time we've put in an all-time high, we've tended to be weak on the retest. So that brings us into scenario 2, which could really just as well be scenario 1, but I have to stick with the auction rules. The expectation for scenario 2 is a push into the high, into this 2475 area, consolidate fall back into the range, and then have a continuation down that brings us into 13 and potentially into this 10 area before the bounce back. So we end up with a higher high, higher low with a point of control somewhere in this thin portion of the profile right in here, and that's the main idea. The third scenario is an open test drive up because that favors the trend, and then the fourth is an open test up drive down that brings us down and brings the market back into equilibrium in the 3001 to 3004 area. Okay, any one of those could work out. It is Thursday. Really, anything can happen today. I'll leave you with that. Thanks for tuning in. Sorry it went over 6 minutes longer than expected, but there was a fair amount to cover yesterday. For those of you who did not hear the last 6, 7 minutes of yesterday's Trader Bite, I invite you to check that out. I talk about what it takes to really make it in trading. It is the holy grail. It's not some indicator, it's you. So I would invite you to listen to that for a minute and internalize that information as you push forward with your progress as a trader. We wish you the best of luck. Take care.